This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Did you review the documents that the GM submitted to the committee?
No, I did not. There was over 200,000.
Where the testimony you're about to give.
Drama on the Hill, a tough outing for General Motors CEO as lawmakers pressed her about why it took a decade to recall cars with defective parts. But did her answers satisfy investors and drivers?
I believe the markets are rigged.
Okay, so there you go.
And I also think that you're a part of the rigging. So if you want to do this, let's do this.
Drama on the street. Is Wall Street rigged? The debate stopped trading midday at the New York Stock Exchange today.
All this as the S&P rallies to an all-time high. But will earnings season derail the move higher? We have all that and more tonight on Nightly Business Report for this Tuesday, April 1st.
And good evening, everyone. It was a record day on Wall Street for the S&P 500 and the Dow Transports, by the way. But we begin tonight with General Motors. It is under intense scrutiny by lawmakers for safety concerns about its cars. And today, its new CEO got slammed by members of the House over how the automaker mishandled the crisis. Faulty ignition switches in General Motors vehicles have been linked to 31 accidents and at least a dozen deaths over the past 13 years, prompting a massive recall. But lawmakers want to know what took GM so long. And did GM put money ahead of lives? For her part, Barra attempted to reassure those lawmakers, along with investors and drivers, that GM cars are safe and that she and the company are terribly sorry. Eamon Javers has more on today's heated testimony, Barra's performance, and what's next for GM.
GM CEO Mary Barra arrived on Capitol Hill this afternoon to apologize for GM's failures leading up to the automaker's recall of 2.6 million vehicles for dangerously defective ignition switches.
Nothing but the truth.
I do.
The audience included grieving family members of people killed in switch-related accidents.
Today's GM will do the right thing. That begins with my sincere apologies to everyone who has been affected by this recall, especially the families and friends who lost their lives or were injured. I am deeply sorry.
But in the face of tough questions about what GM knew and when about the problem, Barra repeatedly said she did not have the information, citing GM's ongoing internal investigation.
GM was notified by Delphi of this, correct? Yes or no?
I am not aware of.
You don't know about that? I'm getting this information from the chronology that GM provided to NHTSA.
I was not a part of that organization at the time. That's why I'm doing the investigation to understand that.
When was it that GM informed NHTSA?
I don't know that.
It was a tough outing for the relatively new CEO of the nation's largest car maker.
Ms. Barr, you're being asked a number of questions. Just want to be clear. Did you review the documents that the GM submitted to the committee?
No, I did not. There was over 200,000.
The day began on an emotional note as the families of the dead gathered with lawmakers.
Our daughters, sons, sisters, brothers, mothers, fathers, wives, and husbands are gone because they were a cost of doing business, GM's style.
At the hearing, Barra announced that 9/11 victim compensation czar Ken Feinberg is going to take on a similar role here for GM. And she's not done yet. Tomorrow she's going to face a Senate committee as well. For Nightly Business Report, I'm Eamon Javers in Washington.
Joining us now to talk more about GM, Brian Sponheimer. He's auto analyst with Gabelli and Company. So, Brian, how did Mary Barra do in your view? Did she answer the questions that you wanted to hear?
Well, I think that Ms. Barra did as well as could be expected, given that she's new to the job. She wasn't CEO when this all took place. I found her to be humble, to be apologetic. She did not speculate as to what the real answers could be, and I think they're very much in search mode as to what those answers actually are. This is very early in the process. It's not surprising that Congress wanted to see her so quickly, but I think that to her credit, she did not go so far as to make any statements that down the road could really come back to haunt her.
But in some cases, she didn't answer the congressmen and women's questions, did she, Brian?
No, I don't think she did, and I think that could be expected. As she said, there was a 200,000-page data dump that she and her team are working through right now. I think that
But
as
if
this
Congress people could have read it, why couldn't she or her people have done that and briefed her on it? I don't get it.
I think that it's very easy when you have a 200,000-page data dump to be able to snipe bits and pieces and have a bit of a gotcha session. I think Ms. Barr could have done a little bit better job with some of the more what I would say headline issues that I think that she should have been better briefed on. But overall, this is an ongoing investigation, and I think that the worst thing that she could have done would be to make a declarative statement that down the road could be proven to have been misleading.
Brian, what about consumer reaction? How do you think drivers are going to feel about her testimony? Are they going to feel safe in a GM car? Do they trust the company?
You know, I think the proof of this will bear out over some time. It was interesting today, GM released its March auto sales with the rest of the automakers, and their passenger car sales were up 10% for the month of March, and this has been front page, headline leading news for the course of the last couple of weeks. So it would have been interesting to see whether consumers decided not to purchase towards the back half of the month. That doesn't appear to be the case. As this plays out over the course of the next few months, I'd expect there to be some sort of backlash from consumers, but thus far, it hasn't really taken place.
For investors in General Motors, is this a problem?
I think it is in the near term. Clearly, there are going to be a couple of moments over the course of the next couple of months that can be expected to be fairly ugly as this investigation goes forward. Obviously, with consumers passing away in auto crashes, it's a terrible event, and I think that there's more to be found about this, and I think that at least in the near term, this is an overhang for investors. As you look out 1 year, 2 years down the road, I think it really gets back to whether GM can make cars that are of the quality that consumers expect. They have a good product lineup as far as what they've rolled out over the course of the last 2 years. The question is, can they convince consumers that what they're making is on par with their competition?
And that's going to be a big question. We'll see how that all plays out. Thank you so much, Brian, for coming on the program.
Thank you for having me.
Brian Sponheimer, he's with Gabelli and Company.
Well, as Brian alluded to, all this talk today came on the day that auto sales from March far exceeded estimates, even for General Motors. Overall sales up nearly 6% last month, on pace now to sell more than 16 million units this year. Shares of General Motors cars rose 4% overall. Sales at Ford up 3%. Best March in 8 years for that company. And the big winner was Chrysler. Sales there up 13%, mainly on the strength of its Jeep division. Shares of Ford rose nearly 5% on the day. General Motors shares were flat.
Well, those strong car sales boosted stocks on this first trading day of the second quarter, along with solid manufacturing and construction spending reports, and it even pushed the S&P 500 to a new record high. The Dow rose almost 75 points. The Nasdaq surged about 70 points on a big jump in tech stocks, and the S&P added 13 points, closing, as we told you, at 1885, a record.
Well, as the market rallies, will earnings season be the next major hurdle for stocks? According to FactSet, first quarter profit warnings are already near record levels. Our friend and FactSet's senior earnings analyst, John Butters, is back with us to put it all into context. John, welcome back. Good to see you. Earnings season, does it have the potential to stall or derail the market?
Well, Tyler, as you said, we're expecting a much weaker earnings season than we did when we started the quarter. The expected earnings growth for the index is now a decline of 0.4%. That's down from an expectation of 4.4% at the start of the quarter. And much of the reason we've seen that decline is the high level of negative guidance that you talked about. At this point in time, 93 companies in the S&P 500 have given negative guidance. That's the second highest number we've seen since we've been tracking the data back in 2006. And two sectors in particular really stand out: the consumer discretionary and the industrial sectors. Both of those sectors are seeing record numbers of companies giving negative guidance. And those are two sectors that are likely going to be impacted by the unusually cold weather we had during this past winter.
Well, you know, these analysts track the numbers not only for Q1, but they're also looking ahead to the second quarter, third quarter, fourth quarter. What are the projections that you're seeing so far? And to Tyler's point, how might this play out in the markets?
Right. Well, the first quarter is certainly expected to be the dip in the earnings season, in earnings for the next couple of quarters. If we look ahead, for second quarter, analysts are looking for growth of 8%. And then when we get into the second half of 2014, That's expected to hit. They're expected to hit double-digit earnings growth at almost 11%. So, one of the key things to watch this earnings season is the guidance, what sort of comments companies give. Because if we do see analysts start to, companies rather, start to lower their expectations, we may see analysts take those numbers down. And on the flip side, if we see companies saying, well, the first quarter was a one-quarter aberration due to the weather, we still expect things to be solid for the rest of the year. Again, the market will probably take that optimistically if we don't see those numbers come down in the second half of the year.
Is the weather the principal reason earnings are going to be flat in the first quarter of the year, or are some companies using it as a fig leaf to cover up things that go deeper than that?
Right. Well, that's hard to say at this point. I mean, certainly in the past, we have heard companies use weather as an excuse, and we're seeing some of the boy who cried wolf syndrome potentially. But this time around, I think it is a legitimate excuse. Of the 18 companies that have reported so far, 8 of them have cited the negative impact of weather, most of those being in the consumer space, such as retailers, such as Costco, or companies in the industrial space that had difficulty transporting goods or transportation in general, such as FedEx and Cintas. So I think this quarter the weather is a legitimate issue in terms of having a negative impact on revenues and earnings.
So the spotlight will be on J.P. Morgan Chase next week. It reports its earnings. It's the big Dow stock reporting earnings on next Friday. What are you expecting from them? And looking ahead, how are the financials doing?
Right, so if we look at J.P. Morgan Chase, they're expecting about a 10% decline in EPS this quarter, and this would be the third straight quarter they've had a year-over-year decline in EPS if that's the case. And the financial sector is really an interesting sector because this quarter, it's really a middle-of-the-pack quarter. It's expecting about a decline of 1.5%. But last quarter, it was the leader in growth at about 24.5% due to strong results from insurance. And if we look ahead in the second half of the year, this is one of those sectors that's really expected to see a pickup in earnings growth in the third quarter and fourth quarter. So we'll certainly keep an eye on the guidance and commentary from these companies, as this is expected to be one of the best performing sectors in terms of earnings growth in the second half of the year and for all of 2014.
Right. Our quarterly visit with John Butters. Thanks a lot.
Great. Thank you for having me.
John is with FactSet.
And still ahead, last-minute surge. A target once thought out of reach was met. 7 million people have signed up for health care insurance under the Affordable Care Act. But does that lead to a healthy prognosis for the new law? That's next. General Motors wasn't the only iconic American company getting grilled by lawmakers today. So was Caterpillar. The world's biggest mining and construction equipment maker is accused of shoveling $8 billion in profits to offshore accounts and evading billions in U.S. taxes. Hampton Pearson was at that Senate hearing and has more.
Heavy equipment giant Caterpillar avoided paying $2.4 billion in U.S. taxes under a corporate restructuring 15 years ago that shifted most of the profits from part sales worldwide to a subsidiary in Switzerland. That's the major finding in a just-released report from the Senate Permanent Subcommittee on Investigations. What turned into a 5-hour marathon hearing began with committee chairman, Michigan Democrat Carl Levin, saying closing offshore loopholes should not be held hostage to a complete overhaul of the tax code.
We cannot tolerate the loss of our taxable revenue the way it is currently lost to Uncle Sam, which is the use of these tax loopholes, which are unjustified and which are exploited and pushed over the limit at times. And we've had hearing after hearing which shows that.
Caterpillar and its longtime tax consultants, PricewaterhouseCoopers, which was paid $55 million for its strategic advice, say they are obeying the law, pointing out Caterpillar's effective tax rate is 29%, 3 points higher than the average for U.S. corporations.
Caterpillar's philosophy is that our business structure drives our tax structure. We do not invent artificial tax structures.
Republicans on the committee were outspoken in their defense of Caterpillar and its offshore tax strategy. Leading the charge, Senator Rand Paul.
We should be complimenting Caterpillar and perhaps giving them an award. Caterpillar not only employs 52,000 people, but pays $600 million in taxes every year. So really, we've got the wrong people on trial here. You know, the tax code needs to be on trial here.
So, Caterpillar now joins the ranks of Apple, Microsoft, and Hewlett-Packard, who've all been called to Capitol Hill in the last 18 months to defend their tax strategies. For Nightly Business Report, I'm Hampton Pearson in Washington.
And staying in Washington, there's some celebrating at the White House tonight over a milestone for the Affordable Care Act. The administration says more than 7 million Americans signed up for a new health care plan through online marketplaces by last night's open enrollment deadline. President Obama spoke at the White House late today.
I've said before, I will always work with anyone who's willing to make this law work even better. But the debate over repealing this law is over. The Affordable Care Act is here to stay.
So, has the 6-month enrollment period been a success? John Harwood joins us now from Washington with more. John, what happened at the end of the enrollment process to reach these goals, these unexpected numbers?
Well, Tyler, the White House always said that the shape of the enrollment process would include a spike at the end. I think this is a spike that was bigger than they expected, but they did a very heavy social media campaign. That's why they sent the president on with Zach Galifianakis on Between Two Ferns, meant to hit young people. You had LeBron James endorse. You had Ellen DeGeneres hosting the president on his show. A whole series of celebrities tweeting out on the last day that people sign up. So I think that's what produced this number. And as for whether that makes the enrollment a success, don't know that yet. We won't know until we see how financially viable and balanced these exchanges are.
So President Obama sounded pretty upbeat today, saying the Affordable Care Act is here to stay. John, what's his message?
Well, his message was two parts, really, Susie. One was celebration, as you indicated earlier. I haven't seen the president, his aides, congressional Democrats this elated since the night that he won a second term. But the president also was reflecting real exasperation with the political resistance he's faced. There was a plaintive tone in his voice when he said, I can't understand why people are trying to argue against providing health care to people. Now, that political battle's not over, but he was trying to steel his side for the fight that's going to take place through the fall when Democrats try to win back the House. That's going to be hard, and hold on the Senate. That's also going to be hard.
What is the GOP's reaction to today's events?
Well, you see a whole series of reactions. First of all, yesterday, Speaker Boehner said we were going to continue trying to repeal the law. You had some Republicans coming out and saying that the numbers are made up, that this is just spin from the administration. Others saying, well, yeah, maybe people have signed up, but they haven't paid their premiums. I think they're still trying to absorb these numbers. And over time, once we see how satisfied Americans are, maybe the program gets more popular or not, the outcome of that is going to determine how well the election goes and then the fate of the law going forward.
All right, John, thank you very much. John Harwood at the White House tonight.
Trading on the New York Stock Exchange at a standstill for a time today. Traders were transfixed on author Michael Lewis, who says that stock trading is rigged by so-called high-frequency traders. Things got really hot between Brad Katsuyama of the trading company IEX Group and a prominent figure in Flash Boys, and William O'Brien of the high-tech exchange operator Bats, over whether the average investor can compete with high-speed traders accused of rigging the markets.
You said it in the book. That's when I knew the markets were rigged. And it's disgusting that you're trying to parse your words now.
Do you?
Okay.
Do you think
can't
the market
say
is
that.
rigged?
You are quoted that way in the book, but
let's walk through an example.
Do you believe it or not? Because you said it.
Let me walk you through an example.
It's a yes or no question. Do you believe it or not?
I believe the markets are rigged.
Okay. So there you go.
And I also think that you're a part of the rigging. So if you want to do this, let's do this.
Well, Lewis brought the term high-frequency trading to light this week with his new book, Flash Boys, but still supports investing in stocks.
Do you not invest because, do you stay out of the market entirely because you don't want to be scalped a bit? No, you don't. But that doesn't mean the scalping is okay. To what degree does that system have in it this incredible instability just to enable scalping? The complexity of the system is breathtaking.
Well, meanwhile, the FBI has opened an investigation into the practice, trying to find out if firms taking advantage of fast-moving market data over high-tech wires unavailable to other investors are actually engaging in insider trading. Tyler?
There's a big change coming to the New York Stock Exchange. Goldman Sachs is preparing to sell its so-called designated market maker stock trading unit, which pairs up buyers and sellers right on the floor of the New York Stock Exchange. Goldman acquired the space by paying $6.5 billion back in 2000 for a small specialist trading firm. But now that so much trading has moved off the exchange floor, experts say that that space is now worth only about $30 million, or maybe even less. So can you say tax write-off?
Intuitive Surgical's new device gets the okay from regulators and shares jump. That's where we begin tonight's Market Focus. The Food and Drug Administration approved the company's device called the Da Vinci Xi. It's the newest version of its surgical robot. The device allows surgeons to perform complex but minimally invasive procedures. The stock was the biggest gainer on the S&P 500 today, surging nearly 13% to $493.60. Shares of Yahoo rose on reports that it's in talks to acquire online video service News Distribution Network for $300 million. The deal could be a competitive threat to Google's YouTube. Yahoo was up more than 1.5% to $36.49. And casino stocks popped after Macau announced first quarter gaming revenue grew 20%, beating analyst estimates. Wynn Resorts, Las Vegas Sands, and MGM get most of their revenue from Macau. Shares of all three companies were up more than 2%. Here are the numbers. Wynn closed at $227.18, Sands at $82, and MGM at $26.53.
News Corp, its chairman Rupert Murdoch and other company officials won the dismissal of a lawsuit. That suit accused them of defrauding shareholders by hiding illegal phone hacking at two of its newspapers. Shares of News Corp up about 1.5% today to finish at $16.94. TJX Companies, the parent of TJ Maxx and Marshalls, upped its quarterly dividend by 21%. The new dividend of about 17 cents a share will be paid to shareholders in June. Shares up a fraction, 61.19, the finish there. Coming up, 4 million Americans expected to get hit with the alternative minimum tax. Are you at risk of paying it, and is there anything you can do to avoid it?
Just 14 days to go before tax day, April 15th, and many high earners are dreading the possibility that they might have to pay the alternative minimum tax this year. So what's the AMT all about, and how can you avoid being targeted for the tax? Sharon Epperson has some answers.
Almost half of Americans do their own taxes, and many think they're taking advantage of all tax breaks. But millions of taxpayers may not realize some big tax breaks they'd normally take on their regular income tax return won't save them any money at all if they're subject to the AMT, the alternative minimum tax.
You know, many people actually call it the stealth tax, and it's because it comes as a surprise to people that they're affected by the AMT.
Many taxpayers need to do two calculations, one for their regular tax and one for the AMT, and prepare to pay the higher amount. A certain amount of income is exempt from the AMT. If you're a married couple, the full exemption amount is $80,800. It's $51,900 for single taxpayers. But the AMT exemption phases out as incomes rise. As a result, taxpayers with incomes over $200,000 are most likely to face this tax.
It's generally those people who are, I'd say, moderate to upper income, who may have lots of state income tax deductions, a lot of children, or other exemptions. They're the ones who are generally going to be affected by it, or at least need to check to make sure they're not affected by it.
If you live in New York or any place where state and local taxes are high, those taxes can be a big deduction on your regular return. But the AMT won't allow it. You won't save much with miscellaneous deductions, including exemptions for children, either.
Deductions for AMT purposes are in essence penalties. They're trying to capture taxes on expenses and deductions that really shouldn't have slipped in their minds through the cracks.
Many deductions are adjusted downward or eliminated entirely when calculating the alternative minimum tax, and may trigger a tax liability. So what can a taxpayer do to avoid the AMT? Don't take too many itemized deductions, tax experts say, since they'll lose their value. Instead, shift some deductions to a year when you're less likely to be subject to the AMT. But with the April 15th tax filing deadline just 2 weeks away, many taxpayers will just need to be prepared to pay the higher tax. For Nightly Business Report, I'm Sharon Epperson.
If you want to know more about the alternative minimum tax and what it means to you, go to our website, nbr.com.
And finally tonight, it is April 1st, April Fool's Day, and that means some companies try to drum up some press by announcing outrageous stunts or unveil hard-to-believe products that seem to fool a lot of people, including some of us. Domino's Pizza is at it again this year, announcing the Edibox, what it calls the world's first edible pizza box. Do not try this at home, folks. Online grocer Fresh Direct said it would start delivering salmon that was caught by eagles, and PepsiCo, which makes Cheetos snacks, handed out bottles of cheese-scented perfume called Cheeto, describing it as having, quote, buttery notes, accents of sharp cheddar, and a touch of lemon for balance. How do you like that? Happy April Fool's Day.
People were having a lot of fun today.
Yeah,
I
absolutely.
didn't play any jokes on you, though.
No, nor I on you. No.
Well, that's Nightly Business Report on this April Fool's Day. I'm Susie Garrow. Thanks for watching.
And that's no kidding. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you back here tomorrow night.
I'm Susie Garrow with a Nightly Business Report news brief. Mary Barra, CEO of General Motors, getting slammed by lawmakers on Capitol Hill today over GM's failure to ensure the safety of millions of its cars after at least 12 deaths linked to faulty ignition switches. Despite that, auto sales soared in March at GM and Ford and Chrysler. Chrysler sales shot up 13%, its best March in 7 years. Those strong car sales, along with solid manufacturing and construction spending data, lifted the markets and even pushed the S&P 500 to a new record high. The Dow rose almost 75 points. The Nasdaq surged about 70 points on a big jump in tech stocks, and the S&P added 13 points, closing at 1885, a record. And the FBI has opened an investigation into high-frequency trading by some Wall Street firms. Be sure to tune in to Nightly Business Report right here on your public television station.